straight cut the motherfucker. Straight cut the motherfucker.
What's good, man? It's your boy, the Wall Street Trapper. Welcome to another episode of Trappin Tuesday, y'all. I love it, man. Episode 35, man. We tapped in. Before we get started, man, I want you to like it. I want you to subscribe. And I want you to share it. Today's episode is something I feel strongly about because something been on my mind. And it's the risk of generational wealth. So when we say the risk of generational wealth, I mean, when we look at the Waltons, we can say, all right, we understood that Sam put some things in place to make sure every generation had a blueprint. But when we truly look at the people who we are admiring, when we truly look at the people who we are saying are wealthy or successful, I want to ask you a simple question. Do Can we truly say that they're putting generational wealth in place? So let's really dig deep into it for a moment. So we know Hov is a billionaire, but that's still the first generation. We don't really know what Blue Ivy gonna do. We ain't seen her at the head of the ground. We don't really know what the twins gonna do. We haven't seen them at the head. Yes, Jay is successful. Yes, Puff is successful. But we don't know what Justin and the other peers, and we don't know what they're gonna do when they run in the company. So when I say the risk of generational wealth, I'm just saying we got to put more in place than money. Now, I'm not saying that they're not going to handle their business. I'm not saying that they're not going to do the right thing. What I am saying is everybody using the generational wealth, it's a dangerous buzzword. Because what is the blueprint? What is the family SOPs that we got in place that we know for sure that we can secure it? Do we understand that there's a thing called the skipping tax, where I can put some things in place and then I can skip my daughter's generation and go to the generation behind her. We talking about like I can give something to my grandkids and they not even here yet. But I gotta be here because what I gotta do while I'm here is not so much as give my daughter the money. I gotta put her in position. I gotta eat right. I gotta work out. I gotta protect myself, right, and put myself in good situations so that when she has kids, I can teach her what to do. But here's the danger. Here's the risk of the generational wealth. The risk is I'm still learning. The risk is that I'm the first generation millionaire. The risk is that you're the first generation millionaire. The risk is you still got to make the mistakes. You still got to be the pioneer. You can still lose it all. That's right. You can still lose it all. 1 year of not paying taxes. 1 year of messing up the taxes. One bad investment. The risk. Generational wealth. So I'm gonna ask you why you on a journey to building generational wealth. What I truly want you to understand is not so much as the money, what are the investments, but then what are the investment details that you're putting in place? What is the blueprint? Asset protection, asset allocation, and how do we recycle the assets? Because the Vanderbilts were once the richest family in the world. But yet 3 generations in, we stopped talking about it. The Vanderbilts. Before the Rockefellers even got into the oil game, he was a train tycoon. He was a railroad tycoon. They still in place. The railroads are still in place, but yet we don't even talk about this man or his family. The risk of generational wealth. See, he accumulated a lot of money. He accumulated the assets. But he didn't have the family SOPs. He didn't have a blueprint in place to protect the 3rd generation because the son after him fumbled the ball. So while you putting in all the work, what are you doing to protect the ones that you won't even see? Welcome to episode 35 of Trappin Tuesdays, man. We're going to have a good time tonight, y'all. We're going to have a real good time tonight, man. So tonight, I want to entitle this episode, this the learning episode. But before we go too far into this episode, I want y'all to let Tootie ride the beat for a little bit. Tootie, let's ride it a little bit. Give me a little increase. I want y'all to do me a favor, man. In the chat right quick, I want you to give me some flames. I see you, Tori. Let's shout out to the queen. I see you, Zay. Shabazz, Amber, I see you. Malik, I see you. Khadijah, I see you. I want to take a minute, man, to congratulate everybody for helping us get to that number 41 spot on the charts. I want to make sure y'all download every episode right now, man. Go to Apple, go to Spotify, go to Google Play, download it, yo. Let's get to that number 1 spot, y'all. We definitely gonna change the game. I want you to understand how powerful we doing is here today. I want you to understand I, the Wall Street Trapper, you, the trappers, on a network called the Wall Street Looks Like Us Now Network. When we be number 1, I want you to know how powerful that is. We do that as a family. We do that as a unit. We do that as a community. So I want to say y'all thank y'all. I love y'all. I'm going to let Tootie ride that beat for a little bit because tonight we going to go crazy. Let's go. Share this with as many people as you can. Tootie, I like that one. I like that one. I like how he make that bass line just ride on us, man. And let me see some fire in the chat. If you like what Tootie been cooking these last few weeks, I feel like he really been in his zen. Yeah. Ease it out, Tootie. Yeah, I think me and Tootie is on the vibe right now. I think we on the vibe right now. Listen, man, it's episode 35, man, of Trappin' Tuesdays, man. Thank y'all, man. It's going to be another amazing week. This week, we really going to educate. So a lot of the stuff that we would normally do, we're going to do it, but I really want to educate because I realize, man, we've had a lot of people come in these last week. My DMs have been going crazy. Yo, I spent the weekend answering more DMs than ever. And because I still answer my DMs, you know, I'm okay with it. But instead of giving a lot of, because the same thing been happening everybody been talking about SVB. We covered that in episode 34. We killed that in episode 34. Right? We knocked that out the park. So this week there's some things I really want to talk about really truly just locking in. I know we have I want to do something for everybody too, man. If Jose, do we have the podcast link? Do you have that? Let's drop the podcast link in the chat. Listen, man, if you're new to the podcast, if you're new to the show, if you're new to every episode, what I want you to do right now, Jose going to drop a link inside there. And what we going to do is you get something free. You get a free ebook just for rocking with Trappin' Tuesdays. Now, check this out. You get the free ebook. I need you to do something for me. I need you to go on ahead and download the episode. I just go on ahead and share this out with as many people as you can. Let them know Trap on Fire again. And I need you to share the Apple episode, the podcast, the audio experience. I need you to share that. We're going to bring value. That's a free ebook for y'all, man. Listen, man, we're going to start each and every episode. You already know, man, that Trappin' Mantra coming up, man. I need y'all to stand up. I need y'all to put your hand over your heart. I need y'all to dedicate yourself to the trap. Listen, I am a certified Wall Street trapper. I am confident in my ability to make great investments. The stock market is a machine that prints money. And I am more than capable of operating that machine. Not only will I free myself, but my family will eat for a lifetime based on the information that I apply today. I'm a money maker and a wealth builder. Today I break all the chains that anchor me to the poverty mindset. My ancestors will smile now because I have turned our last name into an asset. My family's purchasing power will increase indefinitely. Today I make the declaration that no longer will I be a slave to money. No longer will the generations behind me inherit lack. No longer will I submit to selling my time for money. I am a first generation millionaire. I am the architect of my family's legacy. I am a certified Wall Street trapper, and Wall Street looks like us now. Let's go, y'all. A little bit more on that too? Yep, that's good. Let's go, man. Let's go, man. How are we feeling? I see y'all in the chat, man. Larry Morgan, I see you. Frank, I see you. Let's go, man. Chocolate CB, I see you. Logan, I see you. Let's go, man. We trapping, man. Let me see them flames in the chat. Let me see the scale in the trap house in the chat, man. Y'all know what we doing tonight, man. All right, man, before we go into it, man, I want to let y'all know, man, hey, y'all going crazy. Listen, we have 5 seats left for April 11th. So y'all know, man, we doing a live show, man, inside the Trapper headquarters, man. We doing 2 days, April 11th and April the 25th. Listen, $97. $97. You can come get an amazing experience. You can come, listen, the energy in here is different, man. It's a vibe you will not find nowhere else. Listen, $97, man. So for April 11th, we got 5 seats left. 5 seats left. Jose, let's make sure we got that in the chat. And April 25th, man, I think we have 35 seats left for April the 25th. Listen, man, I can't wait to see y'all. If you got your tickets already, let me see you in the chat so I can know you coming. We're going to have a blast. We're going to have a ball. Might even have something to eat for y'all here, yeah? Some trap munchies. Let's go, man. But listen, man, make sure you bring your travel attire. Make sure you got your pen and your pad. And listen, man, when you come here, you will be able to shop. And the exclusive, you come to the Carter. The Carter is what I call the trap house in the back, man. You come there, you can buy some of the stuff that's not even online yet, man. Come shop till you drop. Come get that exclusive merch. Come get that exclusive apparel. Come get your uniform and let the world know that you are a certified Wall Street trapper. Let's go, family. Let's get on our first segment, Word on the Street. We're going to teach today, y'all. I'm not even going to lie. Today we're going to teach because I know there's a lot of questions that people have been asking me. And who better to help you than me? Because what I've realized is that Wall Street is poorly designed to help the everyday person that's going to work build wealth. Wall Street is not constructed in a way to help non-millionaires become millionaires. That's right. You may think that I'm not, you may, well, Trap, how do these people, what happens is the everyday person doesn't have the $1 million to put in on Wall Street. And so what happens is the financial advisor doesn't get the 10%, which is $100,000 off your $1 million. So when you go to that financial advisor on Wall Street with $100,000, with $50,000, with $25,000, he's looking at you laughing because it's a waste of his time. That's right. You're a waste of his time. Your hard-earned money is a waste of his time. So he's going to laugh at you. They aren't equipped to help the lower class. They aren't equipped to help the middle class. They're equipped for their products and services to go to multi-millionaires. Now, I'm not saying you won't be that one day. Of course you will. But when we equip you with the knowledge to take your own financial future, to take control of your financial future, could take control of your legacy, to take control of your investments, why would you need them anyway? Why would you need them? You don't. So let's get it, man. Our first segment is called Word on the Street. Y'all already know, man. Word on the Street is the meat and potatoes of Wall Street trapping, man. Word on the Street is the meat and potatoes of trapping too. The reason we call it Word on the Street because the streets is where you get all the information. The streets is where you get all the knowledge. The streets is where you get all the game. You get it on the street before you get it on the news. You get it on the street before you get it in the text message or the group chat. You get it on the street before you even get it on Instagram. So Word on the Street is how we going to get our wealth first. Let's go, man. So I saw something important that I saw this week. I definitely want to highlight this. The wage gap is egregious. And what I mean by that is, we talking about the ladies, man. Shout out to the queens because in most households, we know that the women control the money. In most households, the women control the money. The women are considered to be the financial advisors. The woman has longly taken on the burden of facilitating the bills, facilitating the bank account, and giving us a nest egg. If you look at all the shows, even when I was at Ironwork, I used to hear the men say, man, like my wife made my lunch. My wife paid the bills. I just go get it. So ladies, let me say this. Y'all have been doing an incredible job with what y'all have. But right now, here's what I found out, man. In 2002, women were getting 80 cents for every dollar made compared to men. In 2022, 20 years later, we've only increased that by 4 cents. 4 cents. So now you get 84 cents for every dollar a man's make. Now, why can't we get dollar for dollar? Why can't we pay the ladies their worth? Why can't we? I feel like the women should do it. I feel like the women are capable. And if I'm being honest with y'all, when it comes to trading, it said that women make better traders than men. When I was welding, it said that women made better welders than men because they were more stable. They had a steady hand. And it comes to investing, maybe women aren't as emotional when it comes to money as us. I don't know. But what I will say is we're in America in 2023 and men are still making more money than women on a per dollar basis. And so I want to shout out a couple women who I know that's getting to it. Shout out my girl Super Cent. Shout out my girl Judy. Shout out my girl Natalie Nicole. Shout out my girl B. Marie. Shout out all the amazing ladies. Shout out Helani. Shout out Kiana Watson. Shout out all the amazing women that's out here killing it. I appreciate y'all, and I want y'all to know if it was up to Trap, y'all would be making $1.25 for every dollar we make, because here's what I do understand. For every successful man, there's a successful woman out there cheering him on. For every successful man, there's a successful woman that is bearing the sacrifice of making sure that that family is operating. For every successful man, there's a successful woman somewhere making sure he get the job done. So for all my ladies that's in the workforce, I want to salute you. And we got to do a better job at giving y'all more money. I just claimed y'all using y'all. I should go a little further, man. And here it is, man. What women are paid for every dollar that a man makes is 84 cents. Watch this, y'all. This was really threw me off, right? $9,944 women earn less than men in a year. It's a lot. We're talking about $10,000 less. But watch this. Over a 40-year span, women make almost $400,000 less in their career than men. That's right. Women lose over almost $400 in their career. I say, well, ladies, learn how to trade. Y'all can squat their ass. Shout out to the ladies, man. I see y'all, man. Let's go a little further. All right, so for all my new investors, man, I want this one here for y'all. Right, so people always, the DMs I got this week were crazy. So I want to talk to y'all about just the two things first and foremost. Let's start with this. Trap, how do I make money in stocks? Like, let's just start there tonight. Trap, how do I make money in the stock market? Well, one of the ways you make money in the stock market is through capital gains. Trap, what is capital gains? So, hey, can I get my board for a minute? Right? What is capital gains? So capital gains is simply this: the money that the profit you make on an initial investment in the market. Right? The profit you make on investment. So if you put $50 in the market and then it goes up to $100, that $50 is capital gains. That is the profit that the stock has made you. I want us to understand that. The second way we get money in the market is through dividends. What are dividends? That is the portion of a profit that a company pays an investor in cold, hard cash. I like it. So what I'm going to do for a second, I'm going to go to the board and I want to explain these two things so we can see these two things, right? Let's go to the board for a second. And I'm starting to realize that the board is a huge hit with y'all. Jose, the board is a huge hit with them, bro. The people love the board, Jose. The people love the board. All right. So watch this, y'all. So let's say we'll do this. Stop. All right. First one is capital gain. So let's do this. You put $50 in the stock. How do you make money in stock, Trap? Well, the stock goes to $100. You've made $50. The $50, you got to pay taxes on that. So we'll put the $50, you got to pay taxes on that. We will call that's capital gains. Right? So the stock, you put $50 in, it went to $100, you got to pay $50 on that capital gains. All right, Trap. Watch this. Trap. What if I put $50 in the stock and then the stock goes down to $42, Trap? That's minus $8. You don't have to pay no capital gains on that. But watch this. Trap, did I lose? I'm sorry. Yep, it go down to $48. I'm right. $42. So, Trap, did I lose $8? No, you didn't. Well, Trap, how didn't I lose $8? Well, watch this. 50 minus 8 equals 42. That is correct. But watch this. Unless you sell that, now what I did is locked in a loss. So if I bought it at 50, the stock goes down because what is this called, y'all? This is, watch this. This is equity. The 50 shares that we bought is equity. We got equity in a company at 50 shares, at 50 a share. So watch this. We lost $8 a share on, let's say we just say 5 shares, right? We bought 5 shares. So we lost $8 a share on 5 shares. Well, no, you didn't lose that, but your equity went down by $8. If you sell, watch this. God, it's one of them nights, y'all. If we sell, we've locked in the loss. So if we lock in the loss, the only way we get that back, we got to rebuy it. So watch this. If you sell it, watch this, y'all. Ooh, we teaching right now already. Golly. If we sell it at 42, we locked in the $8 loss. So all my travelers, y'all know anything in parentheses means negative, means money went out. Now what you would have to try to do is pay another fee, right? Buy it at, now you're trying to buy it at 42 for it to go back up to 50, right? So you're making that transaction. But watch this. Watch this. Watch this. You bought it at 50. It goes to 42. Watch this, y'all. It goes to 42. Watch this. Watch this. Watch this. Ooh, it's about to be a game changer. This is about to be a game changer. You bought it at 42. Now, we just going to put a number out here. You bought it at 42. Now your cost basis, we'll put this right here, CB. Cost basis mean the price, the average price you bought the shares at, right? Your cost basis is 50, but you buy that bought 42. Watch this. Your CB now may go to 47. So you bought more. Watch this. You bought more at 47. Now your cost basis went from 50 to 47. So what happens now when it goes back up? So now when it goes back up to 42, now you don't got to wait for it to go to 50 to see profit. Now you see profit at 47. I'll just explain y'all. That's the first way we make money in the market. The first way. Let me know if we trapping. We trapping? We trapping? We trapping? Coach, I see you. Let's go. Max, I see you. Let's go. Let's go. We trapping? Is we trapping? Come on, man. Stop playing with me, man. Stop playing with me. All right. So the next thing we got to do now is this. Dividends. This is cold, hard cash. that they pay us. So let's say a company pays us $1 per share. So they pay us $1 per share. That means if we had 10 shares, that means it would pay us $10. Now, if they're paying that per share, that means we will get that once a year, right? Once a year. Jose like when I talk and write, y'all. Jose said, Trap, you got to start talking and writing for the people that's listening. Make sure y'all download it on all podcast platforms, y'all. We're going to give y'all the same experience. So watch this. If they're paying it once a year, that means, they're paying us at one time in a year, we'll make $1. But most companies pay us dividends, what? 4 times a year, which means what? Once a quarter. If they're paying us $1 a share once a quarter, that means they're giving us what? 25 cents a share. This is how you make money. This is how you make money. This is how you make money. So if you had 10 shares, that means you're getting, what, $2.50 a quarter. Am I right? My number's good? My number's good? So if you had 10 shares, you're probably getting $2.50 a quarter. Boom. Boom. $2.50 a quarter. Right? So that's how you're making money. So watch this. 25 cents times 10 shares. It's simple. Because they're giving us $1. So if we got one, they're paying $1 a share. You got 10 shares. That means we're getting $10 per year. We're getting $10 a year. Watch this. Let's go a little further. So what we're doing now is, here's how we win. Here's how we win. Here's how we really double down on the game. Watch this. Watch this. Find great companies that are growing the dividend and has sustainable growth. Meaning, you won't find a company, this is how we kill a game. You won't find a company that's growing a dividend and have sustainable growth. Why, Trap? Why are you saying that? So, a company like Apple, I don't like them because the dividend is small. So, I don't like Apple for a dividend company. But I do like companies like Microsoft. Why? Because the stock price moves. They got a double-edged sword that I like. Stock price moves, and they have a great dividend. Now we just hit them with a 2-in-1. A company like Microsoft has a great stock price that's moving, and they increasing the dividend. It's a mover and a shaker. I just slammed y'all ass again. So if you're investing in the stock market, the 2 ways you make money off a stock is through dividends and capital gains. Before I go, let me say this one thing. Before we move on to the sides, let me just say this one thing. Watch this. This is something I want y'all all to know and realize. Watch this. I'm going to put this in black. Just because a company doesn't pay a dividend doesn't mean it's not a good investment. Jumping out of the trap, that coming to pay no dividend, that's a good investment. Listen, in the growth company phase, growth companies most of the time will not pay a dividend because they're using the money to go back into the business. So what happens is your equity increases. So this is why companies like Facebook's run, companies like Tesla run, companies in the tech industry run, new companies run because they're not paying a dividend. They're putting all the money back inside of the business, man. I just slammed y'all ass 3 times in a row, man. I'm not playing y'all tonight. What type of night we had? What type of night we had? All right, let's move it up further, man. I'm feeling good tonight, y'all. All right, bet. So, as we go, man, let's talk about this, man. There's 2 ways that when we look at companies that we can understand it's a strong company. There's 2 ways that we can move around that we can see a strong company. One, we want to see a company that's growing the revenue strong, but we also want to see a company that's growing the profits, which is the bottom line. Here's what I want you to understand. Pay close attention to me. Just because a company is growing the revenue does not mean they're growing the profit. I want you to think about it like this. Just because you make a lot of money don't mean you keep it a lot of money.
That boy is good. I'm broke, baby. I ain't got no money. Bull. I see you shining.
You feel me? That's how the company is. Just because the company is making a lot of money don't mean that they making a lot of profit. You want to find that balance. So here I give you a list of companies that's making a lot of revenue. Apple, Taiwan Semiconductor, Microsoft, Google, Amazon, Facebook, Nvidia, Tesla. You see this in the tech, and you see the profits running. But watch this. Net profit big dogs. Visa, MasterCard, Broadcom, Microsoft, Apple. These are companies that are keeping a lot of money. I see you, Zay. That's right. That's right. That's right. You want to be in companies that are growing their net profit as well as increasing the revenue. This is good. This is one of them nights. Listen, I know we got people on all levels, but tonight I want to just get my people in. I just want to get my people in. This for y'all to welcome home. So we're going to teach our people, man. So I know my trappers, but listen, every week, we giving game, we pouring out game. But every week we got new people coming in, and I need to teach them. I see they coming. Listen, man, this market really prints money for us every day, and we got to be in position. So my goal as the Wall Street Trapper, my goal with this show, Trappin' Tuesdays, Wall Street looks like us not to leave no trapper behind. My goal is to help us overcome any type of financial obstacles that's in our way when it comes to building wealth, whether it's getting dividends, whether it's getting our money to grow in capital gains. I just need us playing the game. I just need us in position. Because when we talking about the risk of generational wealth, everybody in the family might not be an entrepreneur. But if you can teach them how to invest in the market, this got to be part of the blueprint. This got to be part of the game plan. So they can know how to navigate these waters. So they're not panicking when they say it's a recession. Because it's going to come again. The blueprint and everything that you learn in this game is one of the safety nets that you have for your family. When I tell people, I'm mentally unemployable at this point in my life, knock on wood, it's because I know this game. It's because I know this game. It ain't about me running a business. It ain't about me putting a network together. It's because I can go sit at this game. Push kind of shove, I got to do it all over again. Guess what? I'm going to go cut some grass. If I had to go do iron work again, guess what? I don't mind going to sleep on an air mattress again. I don't mind. Because guess what? All I need to save is about 5-10 grand. I'm going to go play the game. So as long as I can play the game, I'm good. That's what I want y'all to understand. The risk of generational wealth is because you ain't leaving the next generation enough tools. You ain't putting them in position. You done overcame all the hurdles and now you trying to keep them from overcoming the hurdles. Newsflash, there's going to be hurdles that you got to equip them for, not just with the knowledge, but you got to put them in position even when they don't know what's coming. The risk of generational wealth. It's risk, y'all. It's a risk, y'all. All right, man. So listen, we got trappers coming from all different areas, on all different levels. So I told y'all, because I see a lot of trappers coming in, man, listen, this week I won't really focus on getting y'all fundamentally straight. Jose, let's put that free ebook in the chat for them so they can get that. I want y'all to come here and be like, bet. Now here's the thing, y'all. I'm gonna keep it real. Don't just screenshot the information. I need you to look at the information. I need you to read the information. I need you to take it in the information. Don't be a professional note taker. Come here to learn the information that we putting out. So if you're new to the game, this episode is straight for you. I'm taking a guessing out. All right, so right now I'm gonna put y'all on this little pyramid I made up, man. I'm putting y'all on this little pyramid, right? And it's, am I ready to invest? Am I ready to invest? First thing we're going to do is right here. Do you have steady income? Man, I was on a live with a guy the other day, man, and he was complaining to me because he was like, Trap, I got $6,000. I'm living with my parents. I'm in between jobs. I don't believe that I can do what you doing. I don't believe I can live the way you live. I don't believe I can drive what you drive. I say, first of all, that's not a me problem. That's a you problem. We got to enhance your belief system. Because these people out here printing money every single day, there's nothing that we can't do. But if we don't increase our belief system, we can't do it. So let me say this, y'all. If you're in that building stage, like early in the beginning, before you starting to invest, I need you to just get your feet up under you. Before you start trying to put $1 million in the market, before you trying to put every cent you got in the market, I want you to at least just get your feet up under you. Now, I'm not about to tell you have 6 months emergency fund and all that. I'm just saying, you know and I know when you got your feet up under you. Right? And then once you get your feet under you somewhat, now let's start putting 20. Like in his case, he didn't need the whole 6,000 in the market because he didn't know where he was getting his next meal from. So he didn't need the whole 6,000 in the market. All right, so let's get that. So my first thing was, and that's what made me come with this, right? Do you have a steady source of income? No. Find you a job or a side hustle, because everybody don't need to be entrepreneurs. All right, so let's start there. So we're going to put money in our investment account weekly. I made this just for y'all. So let's put our money in the account weekly. Next, so we start in the middle. Next, do you have a stash? Okay. Do you have a buffer of cash ready for emergency or short notice needs? Now, we talking about old boy's situation. He had $6,000. He's trying to put the whole $6,000 in the market. Bro, what we all know is life happens. Life gon' life. So if you got all your money in the market, you don't got no wiggle room. You want your money in the market so where you never got to pull that out. We're not even talking about the advanced, putting my money in the VOO. We're not talking about the advanced strategies. Some of the problems that we having today, we trying to do advanced strategies, we in the first grade. We trying to do what Trap doing. We trying to do what Warren Buffett doing. We in the first grade. You don't know what a good stock look like yet. You don't know what ETF look like yet. You're trying to trade and you don't even know how to set up my account. Listen, I don't have nothing against my people inside of the Triple Beam team or Masters of the Triple Beam. I love y'all. But some of y'all asking me about the option plays. You like, Trap, how do I do options? I'm going to keep real with you. You should be in a Triple Beam team. This how much it don't matter to me. If you're in a Triple Beam team, You should be focusing more on using the triple beam and looking at the companies that I'm showing you than worrying about the option plays. If you in masters of the triple beam, you need to be focused more on, yo, how do I navigate this triple beam? Let me look at the videos and navigate the triple beam. Let me look at, okay, let me see the company. Let me see if I can get the numbers close to what Trap got. Let me now go look at the companies that Trap putting in there before you saying, Trap, what's the option plays? Trap, how do I do an option? If you trying to learn, if you trying to get the option play, you stuck on the shiny object. You got shiny object syndrome. You trying to make the money before you got the mindset. So don't worry about the options. You got time. Trap, I need money now. First of all, you got to get out of that situation. Because if you're in a desperate situation to make money in the market, guess what? You ain't seeing the market clear. The market going to eat you alive, and it's relentless. It don't care. It don't care if your college tuition. It don't care if it's your rent. It don't care if it's going to eat it, and it ain't going to give it back to you if you don't know how to go get it back. Man, that was fire right there. That was fire right there. That was that hard truth that a lot of y'all needed. Cause see you on Instagram, you on social media, and the people telling you, hey, do this, do that, do this, do that. You can make $1 million, you can do this. Yo, that ain't it. My cousin right here. He said, cuz I can't wait to get these option plays. I said, you know how to break down a company? Just because you my cousin don't mean I'm gonna get it to you easy. You're a representation of me. You really gotta get it the hard way. That's my cousin. He like, cuz, here go the money. I got it. I'm like, no. Go get the Wallstreet Trappin course, cuz. Go learn how to break down a company. Go show me you broke down 10 companies. Because you got me, you can ask me any questions. Before you can, if you don't know how to do none of this yet, don't even ask me about an option play. We looking to get rich fast. That ain't how we get there. I won't help you build wealth. I ain't the person to teach you how to get rich quick. If you trying to get rich quick, I'm not the person to teach you, fam. I want you to build wealth incrementally so you know how to play the game. So you don't need me. So you rock with me just because, yo, I like Trap. Trap be turning me on. He get on here every week and tell me something new. Not because you need me. I don't want you to need me. I don't want him to need me. So I want us to understand that if you trying to make money fast, I need to make money right now, Trap. Man, go work. Go get a job. Get you a job, get you a side hustle. Cause you trying to make the market do that for you. Don't get me wrong. There's some, what you call them, I forgot what you call them, like some exceptions to the game. They got some people that get in and just catch on it real quick. Boom, game changed for them. Everybody not like that. And I don't want you being in a situation where you need to make money and you losing the last bit of money you have. Because watch this. When you lose money fast in the market, it can discourage you from playing the game. And when you win money fast in the market, it can fool you into thinking that you're better than what you is. And when you get the two mistaken, this damn market is unforgiving, man. All right, man, so look, I want y'all to know something. All right, so boom, right? Next, have you invested before? Do you know the risk in the details? Do you know what you are doing? Do you know what you are doing? Research or find a coach. I'm here for you every week, right here, Trappin Tuesday. Every week. We got the beginners course, we got Trappers Anonymous, we got the Patreon group. We'll say, drop the Patreon. They're going to be asking, Trap, how do I get in the Patreon? Get in the Patreon. Get in Trappers Anonymous. Take the beginner's course. You ain't even got to graduate yet to the Wallstreet Trappin course. Take your time before you get there. But look, let's go for that. No, boom, yes, decide on your approach. What platform you want to use? Trap, I use TD Ameritrade. I use E-Trade because they got great customer service. What is your style of investing? Are you a dividend investor? Are you an income investor? Are you an options trader? If you trade in options, are you going day trading? Are you scalping? Are you leap options? What are you doing? What's your time frames? Right? What is your risk profile? How much can you lose? Limits. What's your limits? What's your strengths? What's your weaknesses? Me, I understood that day trading just wasn't my thing. So I started going out 6 months, 8 months, 9 months. Guess what happened? When I understood that was my strength, guess what? I went from a 20, 30% to 86%. Try, why you not a good day trader? Because I'm not good at just sitting down that long, watching, trying to find the scalps. Man, that ain't my thing. That ain't my thing. What's my thing? Finding great companies that can be movers in the market. What's my thing? Understanding what economic environment we in. What's my thing? Understanding what's the temperature we in. Understanding what companies are moving in which quarter. That's my thing. I got an eye for it. I'm going to just play to my strengths and not my weakness because the game is unforgiving. I'm going to play to my strengths in this game. Boom. My leap options. I'm winning 8 out of 10 of the leap options. I'm not tripping. I'm not, somebody can say, bro, I made $1 million in this first quarter. Cool, I made $115,000 first quarter. Bro, that's good for you, but guess what? That's great for me. Because that's $113,000, $14,000 I didn't have. It's printing money. And then once you find your strengths, guess what? You can scale easy. All right, let's go a little further, man. Sectors of the market and the assets type. Once we can cover this, man, we ready to go, man. Woo! Let's go. Hey, how we feeling? How we feeling? Let's go, baby. Let's go, baby. All right, man. So look, man. I just don't understand why Warren Buffett loves this company so god doggone much. So, man, last week, man, I looked at the 13F, man. Warren Buffett just bought another 5.8 million shares of Occidental, boosting his stake up to 22%, up from 21%. Bro, what? I'm going to keep it real, y'all. I have been searching this company. Thank you, beloved, for the super chat. I appreciate that. My bad. I apologize. Definitely love. I got to show my... Hold up. Let me take a second, man. Let me just, everybody that send me a super chat every week, man, let me tell y'all, I appreciate y'all so much. I don't come in for that. I cut or give game. And so when y'all give a super chat, man, that definitely feeds the network, that feeds the system. So thank y'all for that. All my people in the Patreon group, salute to y'all, whether you're in a lottery pick, whether you're in the Triple Beam team, master of the Triple Beam, all of you just at the 70.99, and you just blessing the trap, man. Thank you for that. And my Trappers Anonymous members, man, I love y'all so much. Queen Tori, man, I'm going to tell you a gem, man. We always talk about what you doing. We always talk about how you showing love inside the group, inside the chat. I think the chat like you as much as they like me at this point. They be like, yo, where Tori at? I look in the chat and they be like, you ain't here yet. They be like, where Tori at? Somebody text her. So I just want to tell you, Queen, we appreciate you. And we thank y'all for that, man. All right, so Warren Buffett just bought, I just don't know, man. I don't own the company, yo. Because I can't just understand it. But here's the thing, when you invest in, everybody don't got to understand why you like a company. I truly don't understand why he like this company. But I know one thing. I think the company is truly surging just because he in it. And anytime you go buy 5.8 million shares of a company, guess what that company going to do? It's going to go up. All right, man, let's go a little further, man. And here's the filing. I wrote it down. The filing showed that Berkshire bought the shares a few separate times. So he bought it on the 3rd, the 6th, and the 7th of March. Let me tell y'all something. What these people do is, because they got to buy so many shares, they buy it in increments, right? And look at it. Paying prices in a range of $59.85 to $61.90, around the level of my short put options. So Buffett just blew his put options out the frame. I got this from an analyst. Buffett blew his puts out the frame. Watch this. Following Occidental reported earnings, Buffett said, read every word and said, this is exactly what I won't be doing. So listen, man, Occidental is now among Berkshire's top 10 holdings. Right behind American Express and Kraft Heinz. Now, what I will say is this, and I don't understand this. He should have been got out of Kraft Heinz. He said he should have sold it in 2014. Now, I haven't bought the stock because I realized that Kraft Heinz is just a bad stock. I'm asking myself, because he's owned it for so long, is that why he's still in it? Because he's made the profit so much? I don't know. But I don't want to be on it, but I can't find why he's just on his company. I'm telling y'all this. I'm waiting to get in American Express, y'all. I'm telling y'all, I'm waiting to get in American Express. Look at my cousin. Don't put your phone up. 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 All right, let's go, man. Let's move in. All right, watch this, y'all. Listen, I know y'all gonna laugh. An apple stock a day keeps the poverty away.
That boy is good.
Listen, man, we talked about this last week, man. Apple is possibly the best company that America has ever seen, and probably will be the best company America will ever see since we made it. Right? Now, we know things keep going and keep moving. But watch this. Goldman Sachs has initiated that Apple is a buy right now, and that the stock could go at least to $199. Now they're saying there's multiple tailwinds that can offset the cyclical headwinds that Apple are having. But here's what I want to understand. Like, so Travis, why would you say an Apple stock a day? So watch this. The last time Goldman Sachs recommended Apple was 2017. So let's see, 17, 18, 19, 20, 21, 22, 23. 6 years ago, Goldman Sachs recommended Apple. They haven't touched it since then. They've sit on the sideline. Since 2017, Apple is up 300%. Now, you would think for a bank, they're all about making money. And sometimes you got to say this, I got that one wrong. The reason why Warren Buffett has it as its number one position. An Apple stock a day keeps the poverty away. So let's talk about it. So since 2017, the company's up 300%. Watch this. Apple has brand loyalty. Not only do they have brand loyalty, their fan base, their audience base, their clientele base is getting younger and younger. My daughter is 7. She said, Daddy, I want an iPhone. My gullible duck ass went and bought her iPhone 14. Just keeping it real. Her mama like, bro, why would you go get her iPhone 14? I'm like, she wanted a phone. What? She was like, nigga, an iPhone 8? I was like, man, I wasn't even thinking like that. Then my duck ass went and bought her an Apple Watch. And I just went down the rabbit hole. She got some, my friend got her some headphones. She got an iPod mini. She locked in. I done made her an Apple junkie now. Now she Pookie. Now she Pookie. I done got her inside the Apple ecosystem and she's 7. Now she hitting with this. Daddy, I got her on my app. You know, buying. So now every time I'm on this, Leah wants to buy this app. The phone keeps telling me, Leah wants to buy this. I'm on the thing like, I gotta call her, what you want to buy that app for? What you want to buy that app for? Cause Daddy, it's teaching. Now she done learn how to mold me. It's a learning game, Daddy. Man, ain't nothing learning about the people on the skates doing. Ain't nothing learning about that. So, watch this. Brand loyalty. Also, Apple's clientele is getting younger. I'm gonna just keep it real. The younger generation don't want Androids. No shade. No, they don't want Androids. All right. This lowers the acquisition cost. So if you know anything about a business, what happens is there's a cost for every customer that a business brings in. That's the acquisition cost. What did it cost me to bring you in? Right? So if you go into Walmart and you buy something, they got to ask themselves, what did it cost for you to come in? What did it cost for you to spend whatever that is? So you look at a company like Walmart, not only does they have an acquisition cost, they have what's called a per basket cost. Meaning, how much is a customer putting inside of the basket? So they have an average basket cost. So they know now how much every person is spending inside of their cart. So what happens now is they know if I spent $10 billion to get my customers in. So now I can break that down to a per customer. Once I break it down to per customer, I look at how much they're spending per average order or per cart order. So Apple does the same thing. What Apple says is this, if the iPhone costs this much, if I got to spend this much on ads, how much are they spending, one per customer? So if I can get you to buy the iPhone, then I got to get you, watch this. Oh, this is going to be good. Once I get you to buy the iPhone, I now got to get you to buy storage. You got to get into the iCloud storage. So I get to charge you for that. I get to charge you for storage. And then you may as well get what? Apple Music. I'm charging you for that. $10.99, $7.99, $10.99 you want unlimited. Guess what? You probably gonna get it. But guess what? Can we get them to buy this the banana in the tailpipe right here. This really pissed me off once can we get them to buy the headphones? Once we get you to buy the headphones, it's over. Because you going to lose them joints. I stopped buying them. I said, man, just give me the Beats, man. I bet you want the Beats? We're going to jack that up a little more, too. You going to be safe. You think you safe. You going to get the big joint. Bet. Price increased by 42% since they went over to Apple. You didn't know that, huh? The Beats have increased price by 42% since they've been bought by Apple. Watch this. Let's go a little further. This also encourages the consumer or the customer to do what? Make repeat purchases. So not only does the Apple have that, the brand loyalty, they also have the switching mode. Why do they have the switching mode, Trap? There may be very few people, I'm not going to say none, there's very few people that leave Apple and go to Android. How do we know that? Well, because Apple has 2 billion active users. 2 billion active users. So what does that mean? That means people are consistently buying the iPhone, repeat use. So I'm buying an iPhone, I'm losing the iPhone, I'm getting a refurbished iPhone, I'm getting a good iPhone. Whatever you're doing, I'm stealing the iPhone, getting it, whatever you're doing. Whatever you're doing. You're buying a hot iPhone, you're buying an unlocked iPhone, you're buying a jack. Whatever you're doing, you're going to buy another one. All right, let's go a little further. But watch this. Why? All of those things in play. But watch this, Trap. Why did you say an Apple stock keeps the poverty away? That wasn't enough? Watch this. The growth in services and new product innovation will not only bring Apple up by 40%, but by 2027, it could be up by 70%. Let's go a little further. Goldman Sachs and other analysts says Apple could hit the $3 trillion mark easy and be on pace to be the first company to be a $4 trillion business. So my only thing to you is this. In order for them to get to $4 trillion, sales got to be good, earnings got to be good, revenue got to be good, and guess what that's going to cause the stock price to do? Go up. As they go up to $4 trillion, an Apple stock away keeps the goddamn poverty away. Watch this. Apple installs new base growth, secular growth, right? See new opportunities in the company to grow. In India and other mature markets such as China, the services business should account for 40% of gross profit by 2027. Watch this. Let's go a little further, Dave. Boom! Last week, what did we talk about? I don't recycle content, but I had to recycle it for your ass. Last week, I told y'all something. Look what I told y'all. I said in 2018, Tim Cook took the Apple iPhone off the earnings report. He took it off the earnings report because he focused more on wearables and accessories and services. Because he couldn't be a new Steve Jobs, but Apple had to take his identity. He's not the most innovative person, but he was good at being a CEO. So when he took that off, yes, the Apple stock did go down. People got mad. But then he made services, which is why we are repeat customers. 20% of the business. People just said it can equate up to 40% of the business moving forward. Bro, he don't even care about the Mac. He don't even care about the iPad. He care about services and the iPhone. Trap, what stock should I buy? Apple and chill. An Apple stock a day keeps the poverty away, man. Let's go a little further, man. I also, man, DraftKings was upgraded, man. Listen, man, sports betting is becoming a thing, man. It is huge, man. Sports betting is becoming a thing. I don't know how. What I do know is I see more DraftKings and Mercer than anything. They buy all. I'm for the Wall Street looks like us non-network. I am following the DraftKings business model, bro. They go get everybody to influence their thing, man. Look at this clown. DraftKings has been upgraded to a buy by Goldman Sachs, man. Do your homework. This is not investment advice, man. Let's move a little further. All right, so this is good here, y'all. This is good right here, y'all. This is good right here. Watch this. So General Electric cut its CEO's stock award. Now, General Electric canceled it because he was supposed to get $20 million. Watch this. General Electric awarded their CEO a $20 million stock award that they cut if he meets certain thresholds. They wiped out $5 million of the $8.2 million and another $15 million trench. Yo, these CEOs be getting like $1 million in paycheck money, but they be getting a lot of money in stock awards. Watch this. The stock fell by 11% last year, but it is up 8.6% in 5 years. So the stock fell last year, but this year General Electric is up like big. But watch this. They've now split it into healthcare and applying different other businesses, which helps the business, right? But watch this. From the award that he got in 2020, the stock award he got in 2020, it was worth $57 million in 2020. From just stocks. Watch this. If they max it out by the end of 2024, depending on the highest stock price for a 30-day consecutive in mid-March of 2024, it could be worth up to $147 million. He just flamed all our ass. So I want you to understand this. They say, yo, this year we taking the 20 million in stock award, we taking that from you. We taking that from you. Because the stock is only up 8% in the 5-year time span, but in the 1 year, year-to-date time span is up like 30, 40%. All right, cool. In 2024, so that's when the one they got in 2020, in 2024, he get the cash out on it, on the value. So, in August 2024, that's when it'll be mature. So for August 2024, whatever the highest the stock price is, that's what they will compensate him for. Oh my God. It was worth $57 million in 2020. It can be as much as, with projections, it can be as much as $147 million. This is why it's important for y'all to understand this, y'all. This is why it's important for us to understand CEOs doing these buybacks. So a lot of times CEOs do these buybacks because they got 30, 40, they got 2 million, 3 million shares in the company. And when they do them buybacks at all-time highs, that's boosting the stock price up. Be mindful and mark my word. Mark my word. Let's watch the buybacks that General Electric does. This is crazy. All right, let's move on. All right, so one of the things I want us to look to, man, is retail is increasing wages and adding jobs. This is not what the Fed wants. So I was just doing some research because we know last week we talked about what? We talked about companies adding jobs, we're being in a robust job market. But then we also talked about what? That's not what the Fed want. They want unemployment up. So companies like Walmart say, yo, we're going to bring our minimum wage up to $17.20. Companies like Home Depot saying, yo, we spent $1 billion in 2023 moving forward into hiring our wages. Companies like Dollar Tree say, yo, we're going to spend $430 million. I'm sorry, I didn't mean to put billion. $430 million on increasing our wages. So they understand that inflation is high. And so what they're trying to do is help their workers. Like, yo, we got to pay them a little more money because we don't want our workers not being able to work. Now, I don't know what $17.20 an hour, but that's better than $12 an hour. That's better than $14 an hour. So salute to Walmart for that. Home Depot saying, yo, we're going to spend $1 billion in raising our wages. I'm not mad at that, but watch this. Job openings and seasonal adjustments. Leisure, hospitality is up. Leisure and hospitality is up. Retail. This is what the low and the middle class thrive at. Retail, hospitality, leisure, hotels. This is where most people have their jobs at, y'all. So I just want us to see that you have some companies out here fighting for you, but we in a tough game moving forward, man. Let's go, man. All right, so I want to show y'all this, man. Oh, Charlie. Oh, Warren. That's my guys, man. I learned so much from these men, man. So here's a checklist from Berkshire Hathaway, man. This is their checklist when they're looking for companies, man. So one, is the business simple to understand? Does the business have a consistent operating history? Meaning, first, do you understand how the business make money? That's important. If you don't understand that, find something else to do. Second, does the business have a consistent operating history? Meaning, when you're looking at how the business is being built, when you're looking at them operating and making money, is it consistent? Like, have they been around for a while? Are they on an upward trajectory? Does the business have favorable long-term prospect? That's good. That's good. Why is that a thing? Because we want to know this. We want to know this, and it's simple. Does the business have a great upside in the future? Do we see it? When we looking at this business, do we see a business that can consistently grow and have positivity about it? Next, is management candid with the shareholders? This is key. Is management telling us the truth? Facts? Or are they just saying what we need to hear? I'm going to be real. I like to hear companies tell me the facts. Yo, we lost money. Here's why. We fumbled the ball. We did this. There's some things that happened that we didn't plan. This is how we going to adjust. Next, is the focus on returning equity. We want to know, can that company increase the equity? You can look for something called shareholders' equity. That's our money. That's important. Can it be purchased at a significant discount? I just gave y'all the blueprint. That's the price of admission tonight. Good night, y'all. Good night. I told y'all tonight's episode was truly for the people who just come into the trap, and we want to make this thing simplified, man. I see you. I see you, Zay. I know you like that one, Zay. I just gave y'all the real checklist, y'all. This is what Warren Buffett and Charlie Munger, this is how they buy companies. They find the advantages in the business. All right, man, let's go a little further, man. right, so one of the things I saw this week that was real important going into the last week, and I was like, all right, man, let me see something, man. Like, so this is called inflow. So inflows, we saw gold up, so gold is going crazy. Gold is going crazy. We saw a lot of money going into gold. We saw a lot of money going into QQQ. We saw a lot of money going into ARK. And we saw a lot of money going into the 1 and 3 month treasury bill. That's inflows for this month. This is where we saw money coming in the market, right? So there's always inflows and outflows. I like to pay attention to this because I like to see how people are moving around just overall. Let's go a little further. Now, this is the money going out the market. So we saw a lot of money coming out of the Vanguard bond ETF. We saw a lot of money coming out of the Bloomberg high yield bond. We saw a lot of money coming out of the Blackstone senior loan. We saw a lot of money coming out of KBW Bank. And we saw a lot of money going out of the energy sector. Let's just take a minute to say, Trap, I ain't gonna say genius, right? We ain't gonna say genius because we won't be humble. Humility is a great sign of a great leader. But I will say, Trap, you might know what you're talking about. Beginning of the year, what do? We say, yo, after 30 days looking at the market, we say, yo, we got to get out of the XLE. We got to get out of energy, y'all. So we got out of the energy ETF, we cashed out. Then about 3 weeks later, we say, yo, I'm about to sell TPL, Texas Pacific Line. Trap, why are you selling Texas Pacific Line? It's a good company. It's not that it's not a company as a whole, so I want you to understand something. There's a difference between long-term investing, and there's a difference. What I told y'all, it's okay to have what? Time frames. Identifying what am I investing for. So in my long-term position, boom, TPL can sit there. In my 1 year, 3 year position, I needed to go. Why? The market ain't rewarding right now. I needed to go. Can it be in my Roth IRA? Yeah. Can it be in my primary account? Yeah, it's a great company, got a great moat. But in this area, when I'm looking at my Roth, when my recession portfolio, TPL ain't fit this year. It was down 6-7%. Okay, boom. Then what we said last week, we said, yo, if you in Masters of the Triple Beam, or if you in the Triple Beam team, or XLE, or the lottery pick, I say, yo, I sold my ExxonMobil position. We took the $3,000 and we did what? We put profits into a position. I like when I hit y'all with this. I like when everything comes full circle. Look, money out the market, that's almost 2%. That's almost as much as the bank and the regional bank. That we see why that's going wrong. Trap, I'm not telling y'all that I'm a genius. I'm not. But I am telling y'all I just be paying attention. This is why you got to have a long term. Let's go back to that. Long term, short term, medium. The reason why we got to have these so we can know how to maneuver. Now, this is more of an advanced strategy. Because I'm cool with moving pieces on the board, y'all. So when I see this ahead of time, I'm not about to sit there saying, yo, this is not long term. This is my medium and my short term. Yo, I got to get up out of there. I'm not trying to ride that down. I need to get up out of there. And sure enough, look like we made the right decision, man. Let's go a little further, man. All right, so we're going to talk about something called quadruple winching, which is actually triple winching right now. So if you ever took the options class, let's go, Tori. I see you, Queen. I see y'all, man. Salute to everybody in the chat, man. Listen, I want y'all to know, man, I love how y'all be rocking in the chat, man. I love how y'all rocking in the chat, man. Today, let's make sure we put the podcast on the audio experience up in the chat, man. I need y'all to play that audio experience, man. I need y'all to download that, man. let's get to that number one spot. I'm telling y'all, I'm blown away at how this dude Dave Ramsey have 18 million views a month, yo. But here's what I know. And I know this for sure. We're only 35 episodes in. When we get 10, 15 years in the game, I'm going to be real. I think we could do it in less than that, Jose. I think about 2 years in the game with the right exposure, we could be hitting like 2-3 million. You know what I said? I want to go on a church tour. I want to go on a church tour, Jose. I want to start hitting the black churches up, bruh. I want to start going to the black churches, teaching them financial literacy. I want to start going to the black churches. TD Jakes, the Potter's House. Listen, you need me. You need me. You need somebody like me. I come to your church every month. You need somebody like me who can talk to your audience. You need somebody like me who can, because your audience is getting young, OG. No disrespect. Your audience is real young. Shout out to the people shout out to the OG who always, I can't think of the deacon name, who always get me and my people in the front row because he be showing us love. But listen, and I know TD Jakes is a man that loves to talk about wealth. I know TD Jakes is a man that loves to talk about prosperity. If you go to the Potter's House and if you in touch with TD Jakes, I need you to let him know there's a guy by the name of Wallstreet Trapper that wants to come in for free. For free. And teach his community. I want to come in for free and teach his community. Teach them how to invest, teach them about retirement, teach them how to take control of their financial livelihood, build their own financial fortress. Not in ways that they can't understand. By giving them the ways they can understand, giving them diaphragms, giving them workbooks, whatever. TD Jakes, we need to be in a Potter's House. But, not just TD Jakes, I want to do a tour to all churches across America, man. AMC churches, man. Because here's the thing, man. Our people believe, if you're in the lower class, in the middle class, the working class, man, you believe in church. And a lot of times the pastor is telling us to give, and the pastor is telling us to put our tithes in, and I'm cool with that. I believe that you got to pay tithes. In Islam, it's called zakat. But guess what, pastor? I need you to teach me how to get some money too. I don't mind giving you your 10%, but I need you to teach me how to grow my money too. See, it's easy for somebody like me when I went to TD Jakes' church first of the year. He was like, yo, he said, I'm tithing whatever the year is. So that was $2,023. Guess what I did? $2,023. I'm going to tithe that too. Guess what my people did? $2,023. We going to tithe that too. We ain't tripping. But I need you to go from mindset to actionable steps. I need you to go from mindset to show me the actual steps I need to take to grow my money. So we talk about the other churches too. When they going from mindset, when you teach your people about mindset, when you saying the meek shall inherit the earth, when you saying, you know, they leaving generational wealth, when they saying, what are the actionable steps that you as the church are giving your congregation to grow their wealth? And I say you're doing that wrong. Listen, I'm not saying, but what I'm saying is the Wallstreet Trapper, don't let the name fool you. And I got proof. If you want to say trap, I need to see what you putting in. I can show you 3 accounts that's heavy. I want to do it for free. I'm talking heavy. I got more of my accounts than I got in the bank. We talking heavy. So if you got a church, you got a pastor, tell them reach out to Wallstreet Trapper. Wallstreet looks like us in our network. We won't go in the trenches. We won't teach the people. And we know that our people are in the church. And I want to teach them for free. You don't owe me nothing. Let's go, man. All right, so before we go forward, let's go back one time, Dave. All right, so right here we talk about choir winching. So when we talking about quiet winter, we talking about there's 4 times a year that all options contracts and futures contracts expire with quiet winter. So we had single stocks. We saw 28 million single stock puts get out. We saw ETF calls. We saw ETF puts. These are things that expired. And then we saw index calls and index put go up. I like to use the index calls and puts too. But these are the things that we saw expiring. Single stock puts, ETFs, ETF puts, index calls, and index puts. We saw that go up, y'all. So let's go a little further. All right, so now we're going to talk about red flags, man. When you're looking at a stock, let's talk about red flags. Failed promises. How can we see they're doing failed promises? Let's go back and see what they told us in the last annual report 2-3 years ago, and let's see some of the things that they said they was going to do. Did they do it? Declining targets. Are the targets that they're saying they're going to hit, are they decreasing? They're not hitting them. Are they selling us dreams? Remember we talked about Warren Buffett saying, is the CEO candid? Are they telling us stuff that we need to hear? Or are they telling us what's supposed to happen and they're hitting it? All right? Lack of transparency. Like they ain't being transparent with us. Right? Dividend cuts. Are they cutting dividends? Listen, if a company cutting dividends, that means they ain't doing something right with the money. Delayed results in release. High executive turnover. They can't keep somebody there. Insider selling is high. Why is the people inside the company selling a lot of shares? They should be holding on. Now, they should be selling because they got a lot, but are they selling at a high rate? SVB, the man was sold 3.5 million shares. We knew there was a problem. What you been sold 3.5 million shares for? We saw the COO and the CFO go sell 800,000 shares and 350,000 shares. Yo, we know they exiting. Right? Low return on equity. They're not turning money over to us. They're not increasing what we got. Very, very low PE ratio evaluation. I'm just saying. High on the short interest list. High inventory. That's the one thing. One of the things that I know is for sure is when we looking at companies that have high inventory and they not selling, high inventory and low sales, this is not good. And they're giving us bad excuses. So I just want to dig into some of these lists like a little bit more, y'all, because these red flags are important. I don't want to just skip over this. This is important. Let's talk about failed promises. So we talk about a company that's telling us, yeah, we going to do this and we going to do this and then we going to do this. And then every quarter they're giving us a reason why this ain't happening. Or this ain't happening because of this. One, either you can't set targets or you just trying to sell me a dream. Lack of declining targets. So is a company setting targets, yo, we going to hit this, yo, we got to bring that down. A company that can't hit targets is a company with a bad management team. So Trap, why you don't like AT&T? Well, because once they took on all that debt, they had to start cutting the dividend. I don't want to be in a company that's cutting the dividend. Why you got to cut the dividend when times get bad? That mean what? That mean you're not a good steward of money. That mean you're not a good steward of profits. And that mean yo, watch this. I want you to go to a company payout ratio. If that payout ratio outside of a REIT, if that payout ratio for me is over 60, I don't want no part of it. You paying me too much money. If a company is paying me too much for the payout ratio, you are paying me too much. That means you giving me too much of the money out in dividends when that's money you could be using to do what? Grow the business. Kill some debt. If you kill debt, you automatically increase what? Profit. If you taking away some of the debt, you inadvertently increase the profit. That make me feel better as an investor. High executive turnover. Listen to this, y'all. I want y'all to understand this. If a company is consistently losing CEOs and CFOs and people in the C-suite, that means the company ain't doing something right. You know why? Because for the salaries and the stock awards that them people be getting, guess what? Them people don't be wanting to leave. Then people want to stay a part of that company. I'm giving y'all, listen, I want y'all to look at this red flag. Man, let's make sure we got this red flag on the screen. I want y'all to snapshot this and really and truly use this to your advantage. Right, so Trap, why are you saying a very low PE ratio valuation? Watch this, y'all. There's a thing called a value trap. So a lot of times company can have a low PE ratio. Watch what I'm about to tell y'all. They can have a low PE ratio. So let's think about this. Facebook had a low PE ratio, but guess what? Sales was up. Profits was down, but because of Apple, but they're picking the profits back up. But let's say you go find another company that got a low PE ratio, but sales are down, revenues is down, debt is up. Then that PE ratio is not justifying the value of the business to be going up. That PE ratio is telling us, yo, this business is not doing good. Write this down, y'all. Value trap. So I want you to do something. I want you to be able to assess the value of the information that you are getting. Every stock that's on sale is not a stock of value. It's on sale for a reason. It's on sale because it ain't worth it. Think about this. I'm about to hit y'all with something that's good. Think about this. You go to Gucci and Louis Vuitton in the store, and you see the belt on sale. You go to the knockoff man, he got a belt that's similar to that, but it's 10 times cheaper. Question, is that the same value, or does that deserve to be 10 times cheaper? It deserves to be 10 times cheaper. Why? Because you probably only gonna get one wear out of it. You put it on too tight, the buckle gonna fall off. You put the purse on, you swing it 2 times, boom, it fall on the floor. Somebody bump into you in the club, the purse on the floor with all your valuables in it. Oh, my Gucci bag. That ain't a real Gucci bag. You knew that when you bought it. When I see the designer belts and I got all the threads hanging out of it, I know for a fact that ain't no real designer belt. I've been having my little Fendi belt for about 5-6 years. Yo, ain't a thread popping out that thing. You got the Gucci belt on, the 2 G's upside down. You got threads hanging out of it, but you got the audacity to have the belt buckle showing. If you don't stop. We talk about low PE ratios and not falling for the value trap, fam. The same thing with a business. All right, I'm going to go by my business. I'm going to go ahead on. All right, man. So one of the things we talked about last week was about inflation being at 2% and why. So I dug deep and I wanted to show y'all something. Here's the Goldilocks zone. Right? Why does the central banks globally target 2% inflation? Here's why, y'all. If you're in Masters of the Triple Beam, you know why I got the Triple Beam. I got it at 2.5. The terminal rate, because inflation normally goes between 2 and 3%. So I wanted to get in that middle. So watch this. Under 2%. So if inflation is under 2%, the economy is weak. There's low confidence and there's low investments. There's low confidence, there's low investments. Inflation can't be too low. Next, 2% means prices are stable. It means that the market is predictable and we have steady growth. Why? The 2% is the safe zone. The market can grow at 2%. We can grow. We can be really good in that 2% inflation. Now, over 2%, we talking 4%. Now, 3% is like pushing it. But everything else we talk about, the economy is almost out of control. Spiraling costs. Low competition. Well, Trap, but they're at 5, 6. Why is it low competition? The reason there's low competition because everybody can't compete if inflation is that high. Everybody can't compete. Why can't everybody compete? Well, cost of goods is high. If cost of goods is high, everybody ain't got no goods. People got to take on more debt. If people got to take on more debt, what happens? I take on more debt. I got to lay people off. I ain't got a lot of people in the workforce. If I ain't got a lot of people in the workforce, I ain't got a lot of people pushing product. If I ain't got a lot of people pushing product, then it means I got to stop buying as much product. But if inflation is over 2, that means people really ain't buying like talking about it. So I want us to understand it's important. I want to really dig in on us understanding why inflation has to be, why it's to that sweet zone. 5 or 6, remember, prices are high, and that's why you got a few companies saying, yo, we got to increase prices too. We got to increase wages because the paycheck ain't paychecking. The paycheck ain't buying what it used to buy. Remember, we talked about people in Phoenix, Arizona saying, yo, I got to work 75 hours just to pay the rent. You talk about living in a dangerous environment, man. All right, let's move a little further. All right, so I want to give y'all some bearish signals, right? So open interest is low for single stocks and higher for indices. So why is this a bearish sign? Because it's telling us that people aren't playing single stocks. They are more going into the indexes, the S&P, the NASDAQ, the Russell. I trade my options, most of my options, I try to find the indices anyway, SMAs, because it's easier, the ETFs. But anytime you see more volume, or open interest in ETFs and index funds than single stocks, that's a signal. One, put option open interest is higher. So the open interest for puts are higher. And the mean trades are influencers. When you see investors worrying more about the downside, you know that the market is a bearish signal. Why? Because the stock market is what? Forward-looking mechanism. We taught y'all this in episode 3. Shout out to everybody that been since episode 1, 2, and 3 when it looked real gloomy up here. We like Rihanna right now. Shine bright like a diamond. I got to get my teeth clean, y'all. Y'all all in my mouth. I ain't going to get the fake teeth, though. Nothing against nobody that's going to doing it. Nothing against nobody that's doing it. I'm scared. I'm scared that I'm going to go to the wrong person. And I'm going to be struggling like Master P was on the Breakfast Club. That boy was struggling. I said, damn, they got my dog out here bad. So I'm going to just go get my teeth whitened. I'm going to just keep getting them clean and keep getting them whitened. That's the best I can do. And who has Nat do though? Her shit is bright white, boy. Nat shit be shining. Her shit be like bling. I be like, damn, them teeth pretty. That shit is pretty. All right, listen, man. I like that trend that's going on right now, bro. You know why, bro? Because having a good smile is such a confidence booster. And I ain't mad at that. I'm not mad at the men and the women who getting their teeth done. Just make sure they don't give y'all the big ones. Like, get the ones that fit your mouth. Don't let them do you. Yeah, don't let them when you struggling. You gotta keep doing that. Don't. But for sure, like, I like that. I like that. Now, the one thing I'm not gonna really get with is the man weave. Bro, if you bald, take your lip. Don't go get the George. If you come to my house one day with a head full of hair, I'm running your ass out of there. Bro, y'all laughing too loud, man. Hey, y'all, I gotta be on George, y'all. If he come to my house, listen, George is salt and pepper poppy. Bro, if he coming there with a flat top tutor like we had in school, I'm running him. Man, get out of my house, dog. I don't know you. I can't trust you at that point. You willing to do anything. You're willing to do anything. All right, man, let's move a little further, man. But anytime we see investors, the put open interest high, we know that investors are worrying about the downside risk. Anytime the stock market is worrying about the downside risk too much, when it's a forward-looking mechanism, we know one thing, man. Things are not good. It's kind of like me. The reason why I got out the streets, my daughter for sure, but once I started worrying about the consequences, I knew it was time for me to leave. Because it's instinctive for me to do certain things. Once you start worrying about the downside risk and what can happen if I go to jail, if something that I need to go. It ain't for me no more. It ain't in me. Like, I got other things going on. And I had a daughter, so my daughter took that from me. Having a daughter took that from me. It took that edge in the street from me the instinctive, but not I move around in business like that now, which I feel is a safer place. But I'm gonna tell you something, the business world is dangerous, yo. I'm gonna tell you how dangerous business is. People will smile in your face and they will whoop your ass with this pen. People will smile in your face and they will tell you how much they love you, they will tell you how much they want you on board, but they will whoop your ass with this ink pen. It's the reason why I love Billions so much. Because I get to watch that series. If you had never watched Billions, go watch from season 1 to season 6, yo. You will learn, one, that the pen is mightier than the sword. But you will also learn that great businessmen in America, not America, but great business in America, they're not so much about inflicting violence on you. They won't bleed your account. They won't hurt you fight. They won't put you out of business. Move on, man. Let's go, man. All right, so here's something I want to show y'all. One last thing, man. Wallstreet Trappin 101, man. Nothing is guaranteed in this game. So you saying, Trap, can you guarantee me? Nope, I can't guarantee you nothing. 1, long-term beats short-term. 2, market timing rarely works. Very rarely can somebody time the market. 3, diversifying your portfolio is critical. 4, diversifying your portfolio is critical. I was doing my trap audit for my trap masters. 85% of them, guess what they had? A portfolio full of tech stocks. I said, man, if you don't diversify that a little bit. 5, markets are cyclical and volatile, meaning we go through cycles. Don't nothing go straight up. It got to come down and move around. 6, research and find new areas. Yo, it's important that we research companies and find out what's going on. 7, learn from the mistakes of yourself and others. Remember what I said. Learn from the mistakes of others and yourself. Number 8, know your own needs and responses. Know them. 9, accept risk and embrace uncertainty. Listen, there's no such thing as playing this game without risk. There's no such thing as knowing that the bank was going to collapse when it was going to collapse. There's a level of uncertainty in the market that in order to be great at this game, you just got to understand that come with the game. The problem is we won't play the game. We don't want to lose. I won't never lose no money. Listen, don't play the game. I understand what Warren Buffett said. Rule 1, don't lose money. Rule 2, follow rule 1. Listen, the only way you can do that is by doing what? Research. And the only way you can do that is having a timeline. The reason why Warren Buffett can say don't lose money is because he know one thing. If the stock market goes down, guess what he going to do? Buy more. But has Warren Buffett lost money before? Hell yeah. It's the nature of the beast. Number 5, man, check your emotions, man. Number 10, man, check your... Why am I getting the numbers messed up? Number 10, man, check your emotions. If you make investment decisions based off emotion and not data, you are set up yourself up to lose. And I promise you, your emotion going to make you make more bad decisions than good ones. All right, man, let's move a little further. Jose, how you feeling, bro? All right, cool. Dave, let's show them the recession portfolio, man. I just want to put it up in their face so they can see it, man. You did.
Man, what's good, trappers? Y'all already know I gotta show y'all the recession portfolio each and every week, right? So, man, we see a lot going on right now, but listen, the recession portfolio is still strong. So as you can see, man, right here on this first portfolio, you see, everything looking good. Nah, y'all know I got certain things blocked out. I got one more week to go before I can expose it to y'all because I got to give it to my people and Trapper, the Trapper method, into the Triple Beam team and for the Master of the Triple Beam. So you got one more week before I can expose it to y'all, but y'all know I got y'all, right? So we moving. Y'all see what's going on, man. Like everything turned around. We had a good day today because of what's going on with the banks. We thinking that the Fed not going to really kill us, so we all right. Next, though, y'all see the option portfolio, man. Listen. We green. Now we got one right here. This one right here, it is down, but we all right. We're going to weather the storm. right? But you can see, like I told y'all last week, everything was going to print out. We was going to print some money. Listen, man, I'm not a day trader, right? I trade when I see opportunities. So far, I've seen some opportunities. You in Masters of the Trap or you in a Triple Beam team, I know you printing money, man. Let's go, man. Recession portfolio. Let's go.
All right, man. Y'all see the recession portfolio, man. All right, Dave, let's go a little further, man. Let's get to this Trapper hotline, man. What up? What's good, Queen?
Question. Should I revise my 403B account and place in another fund about $700 per paycheck?
What's good, Queen? So your 403B account is your account that is through your job. I don't think you should. I'm not mad at you for doing that. What I would say is if you're taking about 700 per check, I would say once you learn the game, go half and half. Go 300 per check, 350 per check, and put 300 on your own, right? But don't only do that once you learn the game. I wouldn't give it up, let them do what you're doing. I don't want to be the one to say to do that. This is not investing advice. This is what a trap do moment. You already been locked into it, Queen, so I wouldn't go from not doing it at all. I would just say, once you learn to do it yourself, you can go half and half. And then once you start to learn to do it yourself, you can say, I'll give them $250 and I'll take $450, right? It's always just maximizing what you have. So that's my thoughts on that. Appreciate you, Queen. All right, next we got Delvin Garcia. Hey, Trap, what's going on, champ? Just wanted to say thank you, appreciate you for guiding me and seeing the vision of how we were playing the game wrong. Keep doing what you're doing, man, for real. But my question is, I'm between starting my business and wanting to get into the stock market. Thinking about automating my account with VOO and VTI, Apple, and JP Morgan. What do you think? I think that's a good idea. VOO is the S&P 500. VTI is the world index, so you can't lose with those. Apple is the best company in the world, and JP Morgan is the world's biggest bank. Well, the America's biggest bank. I say you're doing pretty good, and you're versatile. I ain't mad at it. Good job, King. I like that play. I like automating it. I'm not mad at it. That's a good play. I think we're gonna run up a check. All right, man, let's go a little further. We'll go into this segment. It's called Learn the Lingo, man. So Learn the Lingo is truly about us navigating through the market so we can understand the language, so we can understand how the game being played, so we're not lost at the jargon that they're using. Let's go a little further. Let's go into it. All right, man. This word is quadruple winching. A date where stock index futures, stock index options, and single stock futures expire. What does that mean? Stock index futures, stock index options, stock options, and single options. Stock index is the index fund. Stock options, stock is the index fund. So it's futures and options, index funds, and it's single stocks and single futures expire simultaneously. Now, here's what I want you to know. This happens 4 times a year on the 3rd Friday of every month, which is March, June, September, and December. Last Friday that just passed, you noticed that you saw the market get somewhat volatile on that day. Why? Because all those options contracts and futures contracts are expiring. Excuse me. As they expire, investors have to reposition their portfolio. I'm going to give you one of the things I like to do. I truly like to buy options between 1 and 5 days after quad winching. Right now it's triple winching because they took away in 2020, they stopped doing on single stock futures trading. So they stopped the single stock futures. So it's now called triple winching. So normally I kind of wait. If you took the options masterclass, let me see in the chat if you want me to bring the options masterclass back. Look at him. You took the Wall Street Trappin course? No, you ain't. What module you on? That man said he on module 1. That man said he on module 1. What module 1 start with? Huh? Exactly. He ain't got it yet. All right, so check it. That is, not worried about that, man. So we're going to bring the options masterclass back, man. We're going to bring it back. And I want to tie it into when I bring it back, Jose, because I know people going to want support. What I want to do is bring the options masterclass back, but I don't want to, I got an idea, Jose. We'll bring the options masterclass back, and then what we'll do is we'll do a, watch this, Jose. We'll do a 3-day workshop. We'll do Saturday we teach, Sunday we help you set up the account and walk through it, and if you stay till Monday, we'll actually go in the market and look at opportunities together. Ooh! Let me know in the chat if y'all want that. So we'll do a 3-day workshop. So you'll get the options masterclass. And then one day we'll teach it. The second day we'll set up the account. The third day we'll come in and we'll make the trade. If we see something, we'll go through making a trade. So we'll go through what our checklist look like, and if we see something that Monday, we'll make a trade. I think that's pretty dope. And y'all see what I've been doing on the options. Now, I done lost $1,000 in there, but y'all see what we doing. And if you in Masters of the Triple Beam, and y'all saw me put up here last week, y'all saw what I told y'all last week. I said, yo, we down right now, but we made a great push back, and I said something. I said, man, we gonna just weigh it through. And sure enough, yo, we here. We ain't tripping. All right, man, let's move a little further, man. I like what we doing here. All right, let's go a little further. Boom, bring it on a brick, man. Bring it on a brick. Let's go, man. Y'all know this when I break down a stock, man, for y'all so y'all can see what they got going on. This week's breaking down a brick is none other than, drum roll, please, Coca-Cola. Now, Coca-Cola is a total beverage company with products sold in more than 200 countries and territories, and companies pursue to refresh the world, including Coca-Cola, Sprite, Fanta, and other sparkling soft drinks. Let's go a little further. So we look at Coca-Cola, man. Let's look at some of the companies under their brand. So we see North America. We see 34% is in North America. But I want you to understand something too. Coca-Cola has actually two businesses. They have Coca-Cola bottling and Coca-Cola, the product line. So what the Coca-Cola product is, this is the Coca-Cola segment of the business where they make the product. This is where they have the syrup. This is where they have the patents. So they have the syrups, they have the mix and matches, and they sell that. So they sell the syrup and the sweeteners. They sell that. And then they have Coca-Cola bottling company. If you look it up, there's two different companies on the stock market. There's KO, and then I think there's KCOKE. Coke. So the Coca-Cola bottling company is the part of the business where they get the finished product and they send that out to you. So they have two separate parts of the business. Now you may be asking, Trap, why is Monster up here? Watch this. Because Coca-Cola bought, this is good. Watch this. The reason why Monster became the #1 selling energy drink in the world was because of this. Monster said, yo, they were competing with Red Bull and all the other energy drinks. But Monster went to the stores and they saw this. They said, damn, Coca-Cola dominates in what's called, watch this word down, y'all, watch this word, shelf space. In the beverage sector, Coca-Cola dominates in the shelf space. So Monster Energy said, well, since nobody in the stores have more shelf space than Coca-Cola, what do I need to do? I would rather have 50% of a watermelon than 100% of a grape. Jose lied down, he's shaking his head. I would rather have 50% of a watermelon than 100% of a grape. So what did Monster Beverage do? They say, Coca-Cola, check this out. Let's barter a deal. I will give you a percentage of this company if you give me some of your shelf space. Coke said, what are we talking about here? They say, whatever you're talking about, let's go in the deal. Look, some of that shelf space you got in them 200 companies, I want some of that shelf space so I can be the #1 seen energy drink. So I can be seen more than Red Bull, so I can be seen more than all these other companies. Coca-Cola says, shit, why not? I'll sell you some of my shelf space for this much equity in your company. That's how you get Coca-Cola being right, Monster being right here. God damn. I just smoked all that because I know y'all didn't know that. All right, so then, here we go, man. Net income has increased over the last 7 years by 5%. Revenue has increased about 1% over the last, decreased 1% over the last 7 years. Pay attention to that. Remember what I told y'all. I'll just go a little further. Here's the brands under Coca-Cola, man. You got Burn, you got Fanta, you got Dasani, Powerade, Fairlife, Smart Water, Minute Maid, Sweeps, Costa Coffee, Sprite, Fuse Tea, and of course Coca-Cola. And Coca-Cola, you got Zero and all these other things. These are the Coca-Cola brands. Boom! The most popular brand to date. Watch this, man. So, the fair PE ratio of this company is 28.2. Right now it's at about 27.2, so it's undervalued for sure. Let's go a little further. And it's their revenue finally climbing back. We see at 2012, it was right here at 48, but then in 2022, we see it's at 42.7. Now, here's the thing that I really understand about that too, though. Even though revenue is down, net profits is up. And I think that's simply because people just backing away from the sugary drinks. People kind of trying to be more healthy. So I think they need to invest in a safer drink. And I think we may have a winner with them. But that it is, we break down a brick. You know one thing, if you're in a lottery pick, if you're in a Patreon, Jose, let's put the link in there. If you're in a lottery pick, if you in the Triple Beam team or Master of the Triple Beam, I am going to give you all a price for Coca-Cola. Let's go, y'all. Moving forward. All right, man, this week, man, y'all know we gotta this one was sweet, y'all. I'm gonna keep it real with y'all. I got kind of discouraged this week. I was like, yo, why am I not finding people? When I was looking and I was going through it, and then boom, I'm gonna be real, my team came through, was like, nah, Trap, we gotta find somebody. So I was like, all right, so I went in the roller, I'm looking, and we came up with this amazing queen right here, man. So we came up with Mabel Little, man. First of all, this beautiful queen was one of the 9 people who were founders in the Black Wall Street. That's crazy. At 104 years old, man. Listen, she survived the 1921 race riots. The granddaughter of former slaves, she came to Tulsa in 1913 with dozens of blacks who came to Oklahoma. She began working at a hotel for $20 a month. She opened her first beauty shop in 1917 and continued in business for 50 years. Between 1918 and 1927, her and her husband adopted 11 children, and she became one of the founders of the Black Wall Street. She also fell under the tutelage of, watch this, Madam C.J. Walker. Think about this. This lady was a student of Madam C.J. Walker. Let's just let that sit in for a second. We talking about the first black woman millionaire. Shout out to Ladies Month. Is it Ladies Month, like International Ladies Month or something like that going on right now? Women's Month, for sure. I get confused a little bit, but we saluting y'all. This woman was a student under Madam C.J. Walker, and she was alive in the 2000s. I want to just let that sit in. Yo, she's so beautiful. Damn. All right, man. So watch this. Her grandfather, Zach, left an inheritance of a 500-acre farm. Well, she ran a grocery store. He owned a grocery store. He owned horses and several barber shops. She was a student under Madam C.J. Walker, and of course, she had a clientele of over 600 women. Check this out. I know women in the beauty industry right now that don't got 600 for show people that's coming to them. Like, real talk. She had 600 people. That's a good clientele base, bro. 600 people? Bro, just imagine if you sold wigs right now. Wigs is popping right now. Them women be spending on them wigs, bro. Anywhere from $600 to $3,000-$4,000. Imagine we had 600 in them. I wonder if I came out with Wallstreet Trapper hair. Would that be a thing? You think we get away with that? I'm saying. This hair helps you build wealth. That ain't a line? I'm gonna leave it alone. But listen, man, she was one of the few, her and her husband, one of the few people who owned a Ford Model T. Listen, this was like the luxury of cars. You picture Mabel hopping out that thing. Dum, dum. What's up? Cranking that thing in the front. You feel me? But she owned it. Right? But listen, man, they adopted her and her husband passed away. And the crazy part was when her husband passed away after they adopted the last child, she was responsible for raising 11 children and still running that business, yo. She was responsible for raising 11 children while still running that business. We thank you, Queen. We love you, Queen. She passed away January 13, 2001, man. Such an amazing queen, such a pioneer. Mabel, we love you, Queen. She's one of the founding mothers of the Tulsa Black Wall Street. Let me know in the chat if y'all want to go on a field trip to Black Wall Street. I got a couple connects. Jose, I want to do some things, man. I'm not going to take the hell off the shelf. Let's move forward, man. All right, man, y'all know, man, this is one of my favorite segments, man, called Wealth Track, man. Y'all know we talk about wealth, we talk about rap, and we bridge the gap and we talk about the two. And so this week we're going to talk about none other than the homie Kendrick Lamar, man. He says something that's dope, man. He says, a piece of land. That's what the Indian said. I needed the man telling me my longevity is in the dirt. Damn. Should buy more property first. Should profit a better dollar with generational perks. Equity at its best. Really, you should invest. These tangible things expire. Don't you expect income with so much outcome? And yes, look at my heritage. We blessed. Yo, that's heavy. Let's break that down for a second. I needed the man telling me longevity is in the dirt. Longevity is in the dirt. So he like, what? Should I buy property first? Let's just stop right there. As a man that owns 40 acres of land, I totally understand that. The longevity is in the dirt. Why? Because they can't make no more of that. They can't automate no more dirt. They can't automate no more mud. They can't do that. And then he says, should profit a better dollar with generational perks. Because there's perks to owning land. If y'all heard my Breakfast Club interview, I talked about that. If you haven't checked the Breakfast Club interview, I'll go check it out. Look what we said. There's nobody that get better tax privileges than somebody that owns land, and then you put a cow, a chicken, or something on that land. We talking about generational perks. Equity at its best, you should really invest. These tangible things expire. They expire. Don't you expect income with so much outcome? And yes, look at my heritage, we blessed. I just want us to take a minute to just look at that, man. That's what Trappin' Tuesdays is all about. That is the epitome of Trappin' Tuesdays, man. We talking about investing your money for wealth purposes. And so let's just segue that right into this wise words from the OG. We started this all by telling you about generational wealth has risk. Are we leaving our kids, are we leaving the generations behind us more than just money? Do they understand the obstacles that may be in front of them? you being a pioneer, you being a trailblazer, you got to not only write down your wins, but you got to write down your losses. We call that family SOPs, and the losses tell us the obstacles that they're going to be faced with. But we got to understand that, man, building wealth is more about just leaving our kids money, man. It's more about leaving the generations behind us money. It's about leaving them a blueprint. It's about leaving them footprints in the sand that they can put their feet in and follow. It's about guidance. So I'm going to keep it real with you, man. Like when you think about generational wealth, and you out here drinking like crazy and smoking like crazy and not eating like it's supposed to be, I'm going to be real with you. You really and truly not helping. Because if you leave your kid $1,000, $1 million, or $2 million, and they don't have the guidance, yo, you just now killed that generational wealth. That's the risk. You also got to be willing to take care of yourself. You got to think longevity. So for me, when I'm thinking about my daughter, I'm like, yo, how do I start working out better? How do I start eating better? I don't drink. I don't smoke. I got to get my rest at night because I won't be here not only because she's 7. I won't be here when she get older. I won't be able to teach her firsthand. Yo, we got to do this. We got to do this. We need to be doing this. Here's the mistakes. I want her to come in here and see me running Trappin Tuesdays. I want her to see me running a production so she can learn how to do production. But even going a little further, I want to skip her, which is the skipping tax where I can give her kids. And I can put that in the trust saying, yo, this doesn't go to her. This goes to her kids. We talking about generational wealth, but we talking about the risk of it. Because as the trailblazers, all we know is the one generation. We know us. How many people we can count on and say, yo, that was generational, that was generational? Not because of the move we made, but because we now see the other generation running the business. The one thing I love about TD Jakes is this. We are watching him put Sarah Jakes in position to run it. We watching it. We watching it. And we get to sit back and say, okay, let's see her run it. Let's see her turn the Potter's house into Woman Evolve. Let's see Woman. We get to see it. I'm going to be real with you. We watched the Kardashians put things in place until the youngest one became the first billionaire. We watched it. So that tells us what? The family is in good hands. And the crazy part was, she did it completely different than everybody else. But guess what? Everybody gave her a blueprint on the journey. Whether you like it or not, they gave her the blueprint. They gave her ingredients. So we don't truly know what generational wealth is until the other generation is in front of us running the thing. Building wealth is about not just elevating yourself. It's about elevating yourself. It's about elevating your behavior. It's about elevating your habits. It's about elevating your focus so then that you can elevate your finances so you can then elevate the family. So we truly don't know what generational wealth is because we don't know what the next generation would do. That's out of our control. So what are we doing to put the next generation in position to be in cruise control? The easier you can make it for them, the more long lasting we know that wealth can be. So when we say change the dynamics of our family and we say turn our last names into an asset, your asset depreciates if you do not put value in it. Woo! I want you to think about that. Your last name, your asset does not appreciate if you do not put value in it. What is the value that you're adding? What do we have in place besides money? What's the generational wealth blueprint? What does the family's portfolio consist of? Let's go a little further. What is the intellectual property that the family holds? What is the power that the family has? What is the core values of the family? Because the core values keep us in line. What is the mission statement? Because the mission statement lets us know we after. What is the financial footprint that your family have that you're putting in place? Mind you, because you're the first generation of millionaire, it's on you. You got to carry the cross. And if you ain't willing to do that, man, then what you really doing? The risk of generational wealth. The risk of generational wealth. Are you willing to sacrifice and put the things in place for a generation that you will not see? Because I want you to understand something. You're one generation from them messing up everything you put in place. You're one generation from having one kid who thinks he's entitled or she's entitled. You're one generation from one kid saying, I don't want nothing to do with none of that. You're one generation from one kid selling the whole estate. You're one kid away from one kid selling the entire portfolio. You're one generation away from somebody saying, I can do it myself. And even though you're gone, and even though you're in the ground, and even though you worked your ass off to get it, will you be like the Vanderbilts? You're talking about a man that was worth billions. Or will you be like Sam Walton? The choice is yours. But I will tell you this. Do not let your investments go in vain. Because the opportunities that we don't take advantage of now become obstacles for the next generation. But the opportunities that we do take advantage of become leverage for the next generation. And the consequences of building wealth is a lifetime of freedom. My goal is to create a family and a bloodline that is normalized freedom. Time equity, only your 24 hours. And that's what Trappin Tuesdays is all about. It's about helping you create legacy, being more confident in your investment decisions so that you can stop getting it out the mud and you can get it out the market. It's your boy, the Wallstreet Trappin, man. Thank you for participating in another amazing episode of Trappin Tuesdays. Episode 35 was truly for the ones who just jumped on this boat with us and you want to ride it out. You're looking for a new home when it comes to learning how to build wealth. You're looking for a new place that you can tune into to help you understand the markets. You're looking for a new place that you can call yours, a community, a family that you can be a part of, that have the same mindset of you, that want to go the same place you want to go, but that speaks your language, that looks like you, and that has the relatability. So with that, I want to just say everybody welcome. I'll see y'all next week, man. But listen, before you go, I want you to do something, man. I want you to subscribe to the channel. Make sure, man, let's get it up. We growing. But I also want you to download the audio experience on all podcast platforms, whether it's iPodcast, whether it's Google, whether it's Spotify. Man, we went up on the charts to number 41. That means we 39 places away from being number one. Counting what we have now, a 40. And I know we can be number one. So tonight I want y'all to just automatic download how many episodes y'all can on the Apple store. And I want y'all to just share with y'all friends. I want y'all to put it in the group chats. I want y'all to put it in y'all stories every time you get a chance, y'all, because we gonna be number one. We deserve to be number one. We deserve to dominate the charts. We deserve to be the number one show out because no one else can give you a better experience than us, man. It's your boy, the Wallstreet Trappin, man. I love y'all. Y'all have a good night. I'll see y'all next week, man.